All right, let's get to it. Wrap of the day. We've got a big week on tap. Martin Crabb from Shaw Partners is joining us live in studio. Martin, welcome.
Good to be here, Nadine.
Good to see you as well. Look, I was just, when we were talking off air, looking at the share prices of, say, Harvey Norman and JB Hi-Fi down today. Do you think it's anywhere linked to what we heard from Walmart last night?
Yeah, I think so. One of the scenarios that we portfolio managers need to think about is, do we have a soft landing? Is the consumer going to hold up through all the rate hikes and the inflation and continue to spend money, in which case the retailers, which have been absolutely hammered, I mean, some of them are down, half from their highs, represent some reasonably good opportunities. So Walmart's obviously thrown a massive bucket of cold water over that, because basically Walmart is the US consumer. And if the US consumer is struggling already without the rate hikes really having bitten, it's going to be pretty ugly. So one thing I'm thinking about, I don't own any JB Hi-Fi or Harvey Norman or any of those cyclical retail names in my core portfolio. I'm thinking, when do I start looking at them? So we've got a pretty negative, or the market's baked in a pretty negative outlook for both Harvey Norman and JB Hi-Fi, i.e. earnings falling by 15% per annum for the next 2 years. So JB Hi-Fi's earnings from kind of $5 down to $4. So that's a pretty big fall that's already baked in. So we're just keeping an eye on that. As the Reserve Bank and all the bank CEOs focusing very closely on consumption, household consumption, because that's the key to those names.
Yeah, absolutely. We get retail sales later this week in Australia. That will be instructive. I mean, many people I've been speaking with have said it will continue to hold up for now. It's really sort of the end of the year that we'll start to see it turn significantly.
I think that's right. And you mentioned earlier that Myer had a profit upgrade as well today. So that's another canary in the coal mine from that regard.
Okay, so earnings season is going to be really interesting around the retailers. Outlooks will be super important.
Yep.
Just in keeping with international earnings, we heard from Philips last night.
Yeah.
Its share price, I think I read earlier, was down 35% over the year. It's blaming a lot of the supply chain, China lockdowns, all of that kind of stuff. I mean, can we draw, again, any lines to any of the companies that are listed here?
Yeah, I mean, we probably think of Philips, we think of TVs and things like that, but they're mostly a healthcare company. And they bought Respironics, which is ResMed's biggest competitor, a number of years ago. And their share price has absolutely tanked. It's probably down 40% over the last couple of years. In fact, we've got the share price, since they announced they had problems with their CPAP mask, they had some carcinogens involved, so they've done a product recall. It's somewhere between 3 and 5 million units they've got a recall. It's going to take forever. But that's the black line. It's down 60% over that period. And the grey line is Fisher & Paykel Healthcare, which do the pumps. But the orange line is ResMed. So ResMed has been a beneficiary of the woes of Philips, because Philips is out there not only recalling products, but their sales force can't sell anything. You can't be recalling a product and at the same time trying to sell a new one. Yeah. So they've probably got a couple of years of runway, and maybe even longer. So we really like ResMed. It's one sort of counter-cyclical stock at the moment. It's growing market share in a market that's kind of pretty positive anyway. So again, one man's poison is another man's meat, with the old cliche. I think ResMed looks like they're in for a longer period of sustained growth in that CPAP market. All
right, we'll continue to keep an eye on that one. Just as an anecdote, I'm sure our viewers might have heard me say this before, but my dad uses a CPAP, ResMed, went to go get a new one, sold out, can't get them,
really?
Just on a waiting list, I think, for a year or two. So.
Wow.
He's been reverse engineering his old one, I think. Let's hope. Anyways, Nitro Software. Now, I don't think you necessarily follow it, but it was down today by 22%. Quarterly update out. Annual recurring revenue down. Look, it's just proof that these companies, tech companies in particular, going for growth companies, are going to get punished if they disappoint this earnings season.
Yeah, we saw that as well in a tangential sector, which is in the mining space. Anyone who came out with a quarterly production number that was either slightly below market or their costs were slightly above market got absolutely hammered. So I think the degrees of freedom are very, very narrow. I haven't looked at Nitro. I know it's one that my colleague Jules Cooper covers, but I haven't had a look at that result. But to your point, if the company's priced for continued growth and it misses even by a little bit, it's the base effect. So if you're only growing by 7% instead of 10, maybe you're only ever going to grow at 7. So all my forward earnings that I've had growing at 10 or 15, I'm going to drop them down to 7. So the further out you go, the bigger the impact on the earnings. And then also, if a company's growing at a smaller rate, then you put it on a lower PE. So you get the double whammy. That's why these sort of my colleague calls them pre-profit companies.
That's where it came from.
Pre-profit, pre-profit companies. I'm not sure where Nitro is on that journey, but yeah, a small change in your operating assumptions can have a massive effect on valuation.
I actually think your analysts are pretty positive on Nitro Software, at least they were, so we'll see if there's any big revisions coming through. But I think that was sort of a segue into Microsoft and Apple tonight. I mean, even if you don't own the companies, we're interested in what's going to come through. Somebody on Twitter today had said if Walmart can't sell fruits and vegetables as inflation rises with such a low margin, what about Apple? What happens to iPhone sales?
Yeah, exactly. I think it's probably in the same camp as JB Hi-Fi and Harvey Norman. It's consumer discretionary. And I think pausing your upgrade cycle from 12 to 13 or 10 to 11 or wherever you are in the cycle, I think it's really important. So that chart there just shows how analysts have changed their earnings estimates for Harvey Norman, higher in the short term and lower in the long term. And I think that's what we're probably going to see out of Wall Street as well, is that with the big tech names. And look, Apple and Microsoft collectively probably 5 trillion market cap, 5 trillion market cap, those two stocks. So they're two biggest companies in the world. So they're critically important. And also there's the advertising side of things as well. So these companies are big advertisers. So if they're slowing down sales, it has impact for the Googles and so forth and Facebooks, etc. So it's not just their own revenue, it's their capacity to pay for more advertising and marketing. So that's why they're super critical. So look, I'm a little bit nervous about reporting season. The tea leaves are telling me, the PMI data, all of that is telling me we've got a big slowdown.
So are you nervous about the quarterlies that are ongoing in the States or what it will eventually mean for us here?
What that applies for us here as well,
Yeah, well, whatever happens tonight with those two companies will dictate what happens here tomorrow. It's like having a crystal ball for your day ahead. Now, that's all well and good, but the biggest event of the week really is FOMC.
Yeah.
Do you think in any way the Fed will be looking to shock the market with a 100 basis point hike?
Not a chance. I think if they were going to do that, they would have done like the ECB did. They would have leaked it. They leaked it last time. They kind of said, maybe more than 50. So this is the futures pricing. So I just picked the date, which was the peak, which is back on the 14th of June. So not that long ago, 6 weeks ago. That's the black line. That's what the market was pricing in. It was pricing in peak cash rates in the US of just over 4% by May next year. If you look at it today, which is the orange line, you're looking at peak cash rates in January at about 3.3. So we've come down a long way in 6 weeks, and that's all about the data that's coming out. Not so much the inflation data, but the growth data, the PMIs, and these sorts of things that are coming down. And also, obviously, the market was extrapolating lots of 75s. They're now probably only extrapolating 175 and then smaller ones. The other interesting thing, Nadine, about that is once we hit January, the consensus is for rate cuts. So that's again a big shift. So the monetary policy tiger is only out of the cage for an extra sort of 4 or 5 months, and then it's back in again. And so, your earlier discussion with your previous guest was about, are we at a market low? I'd wait for that point where cash rates are no longer expected to go up, and that's when I think I'm picking a bottom, if that makes sense. But right now, I think there's still a lot of uncertainty to go through.
But we could still see a relief rally
come
Thursday. But we could get another leg up if 75 basis points come through. Powell reaffirms its mission to fight inflation. Will any sort of relief rally at that day, is that likely to fade? I think you answered the question. Volatile.
Yeah, exactly. So I think the market's biggest fear is that the Fed and other central banks make the policy error or compound a policy error of being too slow with being too aggressive and slamming the brakes on a super geared consumer. So there's lots and lots of housing related debt, both in the US and in Australia, and it's a touchy break. So I don't think the central banks need to hit the brake too hard. The fear is that they're going to do that. So if we step away from that with the narrative that's coming out of the Fed, then you might see a bit more of a rally in equities.
So what will happen to Aussie expectations tomorrow if we see a hotter than expected inflation number come through?
Good question. I think the Reserve Bank here is trying to re-establish credibility that it can fight inflation. So I think you've seen the language of Governor Lowe change in the last 6 to 9 months from being really relaxed about everything to being we need to nip this in the bud. So I think if we get a hot inflation, and again, it's not necessarily the rate because it's backward looking, it's the base effect. So if it's growing at 7 now, maybe it grows at 6 and 5 and not 5 and 4. So I think you'll see upgrades to inflation outlook if we get a hotter number this week. So I think it's pretty critical to look at it. And obviously the Reserve Bank will get asked to comment on it, and the Treasurer will be commenting on it and so forth, saying this is a big problem. And we're seeing the damage that it does to particularly low and medium income earners, because they're the people who feel the pain. The rich people don't feel the pain so much, but the low and medium income earners are really going to feel it. So it becomes a political issue as well.
Got it.